Hey, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for August 29th, 2023. I want to step back just for a moment and address a topic from Friday night's podcast, which was the weekly report review. And in that, what I described were four scenarios. Look like four scenarios. And the setting for that was this, that we'd had a nice long bullish run of three big legs, which then had about 15 days of sideways chop and decay and some bad news, and then two sell-off legs. We had leg one and leg two, and the total sell-off from the peak was about minus 5%, so it's just starting to get noticeable. And what that sell-off had done was really took out all of the gains in there. And it closed poorly, and it was sitting right on that support level, which, if it broke, there was another leg down of another 5%. And if that broke, we'd be back to something like 390. By the same token, there was a previous all-time high around 470 that was available. So when we looked at the conditions of the market on Friday, it was in this, what we described as a compound critical state right here. And what I laid out were four scenarios of possible moves for the week ahead, the next leg of the market. And what I said was the most likely one was scenario one, which would be holding and then a retest of the previous high up in here. And that was on the basis of this being a pretty strong bullish move that got us to that level. And so a 5% sell-off could reasonably be seen as a buy-on-dip opportunity that would cause this thing to grind back to a price target that would test that previous 10-day high. So that was scenario one. Scenario two, we said, was, no, this 5% sell-off could break, and we could get another 5% sell-off quick, fast, and in a hurry, particularly because this leg of the market here had really just been a very strong upward move, not grinding, but just really a dash. So there was no support levels that were built in. This was really just a move off of this to here. So this really was support free. So there was a good chance, in my view, that if this broke, that we could get this in a hurry. Now, if that, and so we called that scenario two, would be next leg down. Scenario three was if it did scenario two and the support level didn't hold, and you get something like a runaway freight train that could take this all the way back to 390. The fourth scenario was if this move here, this buy on dip, was not a grind, but it could be just a massive move that broke through that resistance level as if it weren't there and gave you a double good move to the upside. We called that scenario four. Now, I described these and numbered them in the order of what I said was I thought was a reasonable probability. That the most likely was number one, where we have a grinding bull find support, buy on dip, gain steam. And then a continuation of the sell-off, 2, 3, and 4. And the reason I said 1 was more likely than 2 was because at 5%, we're starting to see the recent phenomenon of buying pressure of people that are vested in the long-term bull. Like we know that that's the case with long-term buy and holders because we know that the RL270 has rolled over, and there's actually the long-term buy and holders were more bullish than the tactical traders who had just experienced a sell-off. So I felt like that this more often than not represents the buy on dip opportunity, even though there's plenty of reasons to explain why a sell-off could occur. And then a simple test of the next support level, then the runaway sell-off, and then only fourth position would be this unmitigated gain. So what has actually unfolded over these 2 days was we had a sell-off. Yesterday was kind of a grinding move, and today was a large move up. So day 1 of a recovery, and day 2, a large range directional day. So as it stands today on a Tuesday, 2 days into this 5-day week, it looks more like scenario 1 than scenario 2 on the basis of today's strong move. So this is the point that I would make about you have daily tactical trading in which you just go to work and make your trades. But then the next level, so if we call that tactical, the next level up is we think of as operational, where you start stringing together scenarios of continuous action inside the larger market context, which in this case was a bull that has had a pullback and is now situated at a critical state where it is equally likely to have a large move in either direction, and that it'll start off as a small tactical move and then gather steam. If you didn't listen to that scenario or were not fully tuned in, it's worth going back and listening to Friday night's podcast, 25th of August, to listen to that scenario planning effort, because that turns out to be a very important skill for tactical and swing traders. Okay. Now, when we look at the daily market, now if I add some of these, price bars or whatnot, this is what that looks like now that we've added some actual prices. This move here that terminated in this 10 or 15 day sideways chop was the very peak of that bullish move, which was up around 455. And then we had 2 days, or 2 legs, I should say. Leg 1 in the fall, test, and then fall became winter. We got the second leg down. So that's a move from 455 down to 436, which is minus $20 on 450. That's about minus 5%. So it's now in territory. And then it got choppy in here, there was an effort to make a support level. And you can see the RL10 was kind of juking around. And that's where we stood right here in the middle of the dragon. It had just a little bit of a curl. And that's what we described as the compound critical state. Right in the middle of the dragon, very close to a breaking point, that support level, which I'm going to now code as red, the bottom of the RL10 at 436. If that were to fail, it breaks through the 30-day low very fast, which was made just here, and it gets down to 420 in a hurry, which would be the next 5% move, which is scenario 2, that this doesn't hold and it collapses another leg. If that were to be a runaway freight train, then that could be even worse, and that's scenario 3. That gets it down to 390. Scenario 1 was that it actually holds support here and gets a grinding move. So this is what we had yesterday, a grinding upward move. And then today we had this large range move that closed near the top of the daily range, and we're already back to 450. So the move off of this support level has now started to look like scenario 1. Now, for it to be scenario 2, this kind of a day, you have to have another one of those that breaks through the peak of the dragon and the peak of the RL10, which is around 456. So you have to have another day of about 1.5% to 2%, which would get it above 456. If that were to happen, you're not only going to be above the 30-day high, which was made here, but also above the 150-day high, which was also made here. So a move through, call it 458, is the first time you could breathe a sigh of relief and think, well, maybe this is scenario 4 if it gets north of 460, and then it's only $10 away from the all-time high. So this is a way to start interpreting the tactical price action. Now what I'll notice is that today we had the PSAR flip, that this move of the RL10 through the PSAR is enough to make the PSAR flip. And now we have the potential for a long chain. Now look what we had here. We had over about 20 days of upward, and then about 20 days of downward sloping PSAR. And today is the first day of that potential. Now how long does that last? Well, we never know. But today was a strong vote to the upside. And so I will be ready for day 3 momentum. I'll be looking for immediate confirmation of that move through these different price levels until it breaks above 457. And it better get through that in a hurry. Each one of those would be confirmation, more evidence that the upside scenario is working. If it doesn't do that, then this could also be just a one-day anomaly, and now it starts to roll over, and then a couple selling days gets us right back into this test level, and then we would interpret a failure to follow through as a caught a two to the downside. So the next 2 days are really going to be crucial in terms of establishing what that next swing trade surge looks like. Check or hold. If we go back and look at the 150-day, if I can call that one up. Yeah. Now, if we look at that 150-day, it's a little easier to see what I was saying before. Here was the bottoming action way back in the day around 390, which is the 150-day low, which is the target for any massive sell-off. Is 390 is kind of that downward target. So here was leg 1, here was leg 2, and here was leg 3. Now, the 5% sell-off from this peak came in 2 legs in the fall, pause, summer, or winter, I should say. And this was the price level we said was the test. This was the price level we said was the test. Right in here. Come on, dummy. On Friday. And what we've had is 2 nice days that have gotten us halfway back up. It has erased this last sell-off, and now it's right at the test level here, and now we want to see, can it get to there? Okay? So that's how we can incorporate scenario planning and scenario rehearsal to start thinking about probabilities and to start looking for key indicators about where is this thing going to go as it comes out of that critical state. Now, today's big upward move was reflected in a lot of the intraday trades that were available to us on the 30-minute chart. So in hybrid swing, we're trying to take advantage of these kinds of days when the market itself is making a large intraday directional move. Then a lot of the things that we like to trade that are already moving can give us low risk entries, and today is a day that we want to exploit that kind of a move. So I wanted to say that for context. All right, so we are now into the 30-minute chart, and we're looking at the hybrid swing symbols, starting with Alcoa. And again, this is the yellow box is the 1-day move. This is the 5-day look back, and this is the 10-day look back. 10-day low, 10-day high, and so forth. Okay. So in Alcoa, we were short the other day, paused yesterday, no trade, and today was a COTA 2 with a standard risk to the bottom of the PSAR, and it just went rocketing up and then closed very strongly. So that's already holding about +3, and it's well above this resistance level. All it has to do is get through essentially here, and it's already there. So in my view, the 10-day high is certainly in play. So I like that one as a follow-through for tomorrow. Now here was AI, which we're going to see as the turbo trade of the sniper trade of the day. And what we tried yesterday was a COTA 2 that failed quickly. Today there was a gap and go, standard risk, and we cleared 3R. And because this is at a key price level, I wanted to just lock this in. I know how to get back in, but I wanted to put 3R in the bank. Amazon followed through nicely, my brother's trade. I'm not trading that one, but nice follow through in Amazon. Caterpillar, this one was sweet. We already had leg 1. You could almost argue leg 1, pause, leg 2, stabilized, and then re-entry, standard risk, holding 1, 2, 3, almost 4R, and it closed very well at the top of the range. And it's very near the 10-day high, and it has cleared those resistance levels. So I'm expecting big things from CAT tomorrow. That would be a confirmation that the broader market is doing very well. Cliff, standard COTA 2 entry that closed well, holding 2R. CVS, no trade. Dish, no trade. Devon Energy, no trade. There was a COTA 2 in there, but I had my hands full. This is the second day of the COTA 2 in Electronic Arts, and it closed very well. So we're holding +2. I like that one. Emerging Markets was just massively good. So this is the one we just didn't like, but we took it as a COTA 2 with a very thin risk, and it closed well and then gapped up and closed well, and today it gapped up and continued to go. So we're already holding 1, 2, 3, 4, 5, 6, 7. So second position, and it closed very well. 8, 9, 10, 11 on the first position, and 4 on the second. This thing is quietly turned into a 15R trade, and it has cleared all the previous resistance. So what's not to love? The ones I don't believe in. Now, here was one in Ethereum that was just a rocket sled, and I treated it as a one-day gift. So gap, standard risk, it burst like a rocket through the previous resistance, so added a second position, third position, went all the way up and started to sell, cashed, came back and started to recover. So I invested one of them back in, And it's slightly underwater in the last 30 minutes, but I'm going to give it one more day. And 1, 2, 3, 4, 5, 6, 7 on the first one, 5 on the second one, and 2 on the third one. That was 14R in a matter of 2 hours by being prepared. And really building on the opportunity for Kata 2, and then recognizing where it was free and clear. Even if you don't get this one, you have to take that one, and then you still get the massive goodness of that move. Mexico, Kata 2, +3. Brazil, Kata 2 from yesterday, and a continuation Kata 2 today. 2, 3, that's about 4R. Intel, second position, Emerging Dragon, looking really strong in the semiconductors. IP, yesterday's Emerging Dragon paid off, and that's looking good. So that tells you that there's strength in the broader market when industrial companies like International Paper and Caterpillar are also participating. IYR, I missed the real estate play. I've missed this whole move in regional banks, but it's been kind of choppy. Mattel, yesterday we closed the Kata 2. There was a 1, 2, 3 and a Kata 2 in here today. I just had span of control issues. McDonald's, oh, did I love this one. So we played the Kata 2 to the downside yesterday, and it closed poorly. And today it gapped and crashed. So I just made bank on this one on the short, which was 1, 2, 3 +4. And then it just refused to lose. And I took a 1, 2, 3 entry here, and that closed really well. So that one's already holding +2. So this was a perfect turning point trade in McDonald's that we just lucked into. Really enjoyed that one. Merck. There's a Kata 2 developing. I didn't trade it though. Microsoft, second position, Kata 2, closed very strongly. It's getting ready to test this play here, which is the statistical 10-day high. The 10-day high anomaly is here, but it's already testing the statistically significant one. And we've got 1, 2, 3, 4, 5, 6R on 2 positions in hand, and it closed very well. It won't take much for that to really go. Watch for that to be a tell in the tech sector. Marijuana, one-day gift of 3R on the Emerging Dragon. NVIDIA, strong second position in the Kata 2. And that has very importantly cleared the statistical 10-day high. So I like the fact that this is getting ready to go. 10-day high at 500. If it gets through 500 tomorrow, look out above. And then everybody that could have had it on a 12% sale are going to be kicking themselves. Clean energy. Wow, was this any good? So we had the SSC, day 1, day 2, and now on the third day it was a gap and go, so it cleared the dragon, added a second position, because why not? We had 4R in hand from this one, and then it just kept going, so why not? Second and third position, and then it just felt like I was being greedy. So if you're to hold it at that point and you decide to exit, and you've got 4 positions on, how much do you decide to exit right there? I'll tell you what I did here in a minute. Recognizing that it is at a crucial resistance level where the last time it was there, it sold off hard. I sold 3/4. I took this as the gift, and I'm just holding the longer term position, and my stop is here. And I know how to re-enter, so that is sort of a routine decision. Rivian. Our little Kata 2 that I didn't love because it was so near the resistance actually made it through these two support levels or resistance levels, and we got second and third positions on, and it just closed very nicely. So 1, 2, 3, 4, 5, 6R on the first one, 3R on the second one, 2R on the third one. This is about an 11R on 3 positions, and ready to rock. So this was the S&P today. So this was yesterday's grinding upward move, and this is today's rocket sled. So it has cleared made a new 10-day high today, closed very near the top of the day. So this thing is ready to go. Tesla got 2 positions in on the emerging dragon, and then U.S. Steel took the took the SSC, and it closed very well for about an hour and a half. So very pleased with all of that. Hopefully you found that helpful. All right, let's go to... did a little work with Luke today. He's refining his course on the 5-minute Aussie. He was talking through some of the rule sets today. It looks very simple and predictable. And yeah, this was the... these were the stats on the individual trades. Again, he's now got about 200 trades in the bank, 94 winners, 83 losers. So it's a 52% win rate. And then the average win is twice the size of the average loss. So it's a coin flip that's slightly in your favor at 52%. That pays 2 to 1. That's the equity curve of it. That's the histogram of it, where he takes profit targets when he hits them and doesn't stick around. So that is the norm. This is the rolling 30, 50, and 100 trade expectancies, all looking good, very stable. When you turn that into a daily and make it a daily score. So like on, if I had, 5 days in the week, and I had some number of trades each day, and I simply aggregated that into what was the net for the whole day, he's got an 88% of his days are winners and 13% are losers, which means 5 out of 6 days win, and the winning is 0.7, losing is minus 0.8. So it's essentially a coin that wins 5 out of 6 times with about a 1-to-1 payoff, with a handful of rules trading the Forex and the DAX. And it's not even close to being optimized. And again, that's what your equity curve looks like. It's kind of what you want. And that's your histogram. Controlled losing days, 1 out of 6, and then 5 out of 6 days you're winning. So we're excited to be able to offer that course in the near future as a direct tactical trading system. Pretty excited about that one. This is sort of a standard day for him, where he gets short here takes the 1 hour loss, stop and reverse, second position, third position, standard exit at the dragon, short, second, no, that was a half a position. That was half a position. Short here with -1. So he makes all this bank in here. Here's the sniper trade of the day today. It was just AI. It's pretty straightforward. Come on. There we go. So we're looking at AI. The R10 on that is 40 cents, which is the yellow box. What's interesting is that the closing 90 minutes yesterday, where it was direction neutral. You know, I think of this as the standard noise box when it's just grinding, and that's the bots trading back and forth. That's the same size as the R10. So that tells you that that's what the noise level is. When there's no directionality, that's the buffer that you need. So moves that are larger than that become signal. So it closed here, opened, there's your OR3. There on the second bar, there's your breakout. There's your standard noise box, which is the R10, 40 cents. 1R, 2R, 2R battle drill, just add. 3R, 4R, add. Rolls over, take the dragon exit, that's 6R. It holds at the PSAR. RLXD caught a 2 entry. I just added a second position because it was a new high of the day. And this ended up giving us another 4R before we exited for a 10R day in AI, which, as you know, that's the 3-minute chart. The trade in AI on the 30-minute chart was this one. So where the 30-minute chart, just following the standard rules, gives you 2R with a dragon exit, that same move gives you 10R when you're trading the 3-minute and following the rules. So it's just a question of finding the movers and how much time do you have during the day, what's your span of control, and what is your proficiency with the patterns. All right, let's see what the traders did today. Okay, this is Brian. Gets short at the PSAR flip, cashes, quick scratch, 0.5 for the day. Good work. In the Euro Aussie, nets 0.2. I'm sorry, basically a scratch for the day. And good performance. And that's not even getting the best trade of the day. So there's more available than just within his narrow trading window. But that's he has, because of his situation, he's got to do that. Here's Jose continuing to grind really well. There is your PSAR flip, standard risk. He's long, takes it, basically gets one execution risk, and that's perfectly well done. And he gets it from the entry into the Red River into just barely into the summer. So there may have been more available, but that's a nice way to get paid. Yeah, and we saw Luke's already. All right, that's everything we got for today. The daily report is published and posted, and hopefully you found that discussion of the market conditions and pattern trading helpful. All right, take good care, and we will see you tomorrow. For Jose, I'm going through and I'm extracting a bunch of the live trading workshops that we did over the last 10 years to kind of find the best of the best to make a home study version of the live trading workshop so that you can literally look at hundreds of trades at your leisure and replay them. You'll see how our current style of trading has evolved to the current state. So that's all we have for today.